Hello and welcome to the Trading Bells show. I'm joined by two gentlemen from Mobilist. We shall be getting to know what Mobilist is all about, why they are here in Kenya, and why they actually really are the flow of the Trading Bell. But first, before we get started, I want to welcome Dave Portman on my far end. And of course, near me is Andy Baker, First Secretary, International Finance at the British High Commission. And of course, Dave Portman is the head of Africa Mobilist. Welcome, gentlemen.
Thank you for having us.
Great to have you as well. So let me start with you, Dave, and I'd like to endear our viewers with, let them understand what Mobilist is all about. So if you don't mind, could you help us understand what Mobilist is all about and, share some information about what your program is all about here?
Sure, with pleasure, Minor.
Yeah.
Mobilist is a program of the UK government's Foreign Commonwealth and Development Office, and that located within the development finance offering of the UK government. Mm-hmm. Now, Mobilist seeks to address a very specific aspect of what development finance is, and I'll explain what I mean by that. So, historically, development finance, which is essentially public funds from countries like the UK, the US, and European countries, OECD countries, that are invested for developmental purposes in countries like Kenya and other developing nations. Historically, that's been done in a way that has not allowed for the maximization of mobilization of private capital. And what that means is there have not been all that many entry points for private investors, commercial investors, whether they be international institutional investors, so we're talking here large pension funds, asset managers, or indeed local institutional investors, again, local pension funds and the like. The majority of development investments, so investment that reaches the assets that are developmental in countries in the emerging and frontier markets, has been done by public sources of funding, and Mobilist wants to try and change that, as does the rest of the development finance community. So how do we, the question FCDO asked itself is, how do we mobilize, how do we bring on board private investors to invest alongside these sources of public funds, otherwise known as development finance institutions or multilateral development banks. Probably you and your viewers are aware of the World Bank or the IFC or the African Development Bank. All of these are funded through public sources of funding. They've been around for a long time, some of them since Bretton Woods, since the 1940s, and they've built up experience, capacity, networks on the ground in countries like Kenya and others, and they've learned how to deploy capital for genuinely developmental purposes. So this could be the building of dams or roads or schools or renewable energy plants. And again, the question Mobilist wants to solve is, how do you crowd in private capital? So the way Mobilist does this is by looking to see how it can support products that are looking to list on public stock exchanges, either globally, so it could be London and New York, or indeed on local exchanges like the NSE, and we'll get to that in a minute. And the reason Mobilist wants to do that is that if you can support products to list that have as their underlying activities genuinely developmental pursuits, you create opportunities for private investors to participate in ways that they just cannot in the traditional way that development finance has been done. So private investors are very familiar with stock exchange listed products. They provide regulatory oversight, they provide liquidity, they provide a level of standardization and familiarity, and the challenge has been historically that there have not been enough stock exchange listed products that are developmental in their very nature. So we want to find them, those that are looking to list, and we want to support them in the ways that we can, through investment, through technical assistance funding, and through the broader support that FCDO can provide.
Okay, and fair enough. Still on you, because you've addressed quite a number of things there, and I wanted to ask you on the opportunity that you saw, or the challenge that you saw and you're trying to address, because we're talking about matters private capital through listed instruments. What have you seen to ensure that we have efficient mobilization of private capital?
Yeah. Firstly, so to explain in a bit more detail, historically, the way development investing has been done has been through private markets instruments predominantly. DFIs and MDBs have used private equity funds. They've used other intermediaries on the ground who have local knowledge, who have the ability to deploy private capital in a way that is patient, that's active, and that is supportive of trying to get these sort of developmental assets ready to be investable by private sector investors. And this is for good reason. That's what's happened historically. The challenge we have is that by using these types of structures and these sorts of channels to invest in and curate assets, you exclude the vast majority of commercial investors, of institutional investors. These sorts of private structures are not really accessible to most pension funds for fiduciary reasons.
Yeah.
There also oftentimes are hard currency structures. So the DFIs and MDBs mostly provide hard currency funding, not local currency funding. That's another reason that you exclude, for example, local institutional investors who are not able to invest in hard currency. Sometimes these structures are domiciled offshore for good reasons, but again, that excludes them from what local investors are able to invest in. From an international investor perspective, it's very difficult to contemplate convincing a large pension fund in the States or an asset manager in Europe who has as its core activity investing in the major markets of the world to invest in Africa in the first place. That's the first challenge. And then if you say to them, we'd like to try and convince you to invest for development, but to do it through a private equity fund structure that you're not particularly used to, or some sort of other off-market structure, it's even more difficult. And that's the challenge that we see. Going back to the thesis that Mobilist has, if you can find opportunities for products that meet those regulatory, currency, liquidity, and other requirements of these big institutional investors, be they local or international, then you've got a real chance of mobilizing them. What we want to do at Mobilist is find those products that can be precedents, where the market can look at it and go, look, this works. We've managed to crowd in local or foreign institutional investors into a product, into an asset class that historically has not been done before. When capital markets are not, as we like to say, particularly good at innovating, the incentives don't align for that. But once something has been proven to work, they're incredibly powerful engines for replication. And we want to try and help create those precedents. So where we see products that need our equity capital or our technical assistance support to get over the line, that we think can scale themselves and can be replicated, that's what we're looking to support. And again, always where the underlying assets, the underlying operations of the project or of the product or the business are developmental in nature, something that's going to help achieve the sustainable development goals.
Excellent. Speaking about sustainable development goals, let me bring you in, Andy. And this is the conversation now. There's a lot of focus on ensuring that we have, climate financing, things that are really on the sustainable angle. And I wanted to ask you, how can the public sector and private sector work together to address the financing gap for sustainable development using capital markets?
Yeah, thanks, Lina. I think the first thing to do is to kind of quantify that gap. There is a huge need for more development finance, and Dave has touched on this a little bit. But to expand, we know that there's $1 trillion financing gap for energy transition and clean investment in energy, climate resilience, and adaptation in emerging market and developing economies, all the way through to 2030. As Dave says, the public finance from development partners like the UK government and NDBs and DFIs and like the World Bank, IFC and British International Investment is unfortunately not going to meet that gap. They will invest somewhere in the region of $200 billion a year, but there's still a huge gap. And this is where the private sector comes in. And I think as Dave said, there's a really important role for development partners to think more innovatively about how they can use their finance to be catalytic. Capital markets have a really important role to play in that. They can provide that long-term financing that matches the investment needs of some of these portfolios. So you've got these renewable energy investments that are going to generate returns over long time frames. You need a patient source of capital for that. You also need more capital in local currency. There are huge currency risks that face project developers, and it means they can sometimes mean the difference between a project being bankable or not being bankable, depending on how you can structure that finance. So bringing in those local currency investors, probably your pension funds, your insurance markets, is really, really important. I think there's a significant role for organizations like ours and the wider UK toolkit to help make that easier.
Right. Andy, you're the first Secretary International Finance at the British High Commission, and I wanted to ask you how the UK government is positioned to support the country grow its capital markets for accelerated economic growth.
So we're very fortunate in Kenya that we've got a wide variety of tools at our disposal. We've got partners based here such as Financial Sector Deepening Africa, we've got Garantco, Infraco Africa, the Emerging Africa Infrastructure Fund, which are all elements of the PIDGE group. We've got BII, and now I'm really delighted that we've got Mobilist joining the UK toolkit here.
Okay.
There are three main ways in which we try and promote capital markets development.
Yeah.
And the first of those is working with the regulator to ensure that the policy framework and the operating environment is conducive to thriving and developing markets.
Yeah.
For example, FSD Africa has done a lot of work with the CMA in recent years, helping them to revise their master plan following COVID. We have other partners who are working with them on ESG issues, ensuring that Kenya's policy framework is aligned with and meets international standards, so that those investors from overseas feel comfortable putting their money in Kenya because it's got the right regulatory environment. And we're really grateful for the CMA, who have been very receptive and forward-leaning on a lot of these things. We've got some really good regulators here, and it's really helped the market to develop. The second pillar of our work is really about building that pipeline. So we have a lot of programs such as Infraco Africa, which are developing specific projects, be it in renewable energy or climate resilient infrastructure. There are things that we're trying to do with Nairobi Railway City to regenerate their central station and the area around it. And I think over time that will provide some really exciting opportunities for the capital market. And then the final thing that we try and do is to directly mobilize transactions. Sometimes that's through technical assistance, and other times, which is what we're looking to do with Mobilist, is through direct investment. So we've had some fantastic successes here in Kenya over the years, such as the region's first green bond, which we helped to mobilize through technical assistance and guarantees. That was for Acorn's affordable student housing in 2019. We've done similar things in the private markets with Burn, they're one of the clean cook stove manufacturers. So it's really bringing together the three different pillars of making sure that the regulations are in a accommodative place. It's making sure that there is a really strong bankable pipeline of projects, and then it's actually putting our money where our mouth is and investing directly in these things and trying to use the concessional capital that we can provide to mobilize other investors.
Can I add just a little bit to that? I think it can't be underscored enough how holistic the UK government's approach to development in general and development finance is in particular. What Andy described in detail there is an approach that tries to solve a problem in a systematic way, systemic way, probably is the right word for that, and not in an ad hoc fashion. So it's if you as a government looking to support the development of countries in the global south, only are making ad hoc investments here or only are providing technical assistance there, you're not necessarily doing it in the most efficient way. So what the UK government is offering is a kind of, and I'll finish off on what Mobilist part of this is a sort of cradle to, I don't want to say grave, but if a grave could be a product reaching bankability, cradle to grave approach, where it's able to support early stage products with what they need. It's able to be supportive of the market that facilitates economic activity around those products. And then it's able to support products with different types of capital and different types of technical assistance, for example, support to make them bankable and ultimately put them on a stock exchange. And I'll just close off by saying Mobilist and what I described as it being very specifically focused on listed markets is a completely novel concept in the development finance world. The UK government, FCDO, was the first to recognize the importance of this kind of closing the circle of development finance and providing an off-ramp to these investments that have been curated, these portfolios that have been curated by helping to create bankable projects and products rather that can list on stock exchanges. And so by having this full suite of products, what we hope the UK government's interventions will be able to do again is create systemic change, change that can then create internal multipliers within markets that can then allow those markets to thrive and ultimately reduce their dependency on foreign intervention in the form of development finance and others if the market activity can one day sustain itself. That's the objective, and it can only be achieved through a holistic approach, and that's very much what the UK government is offering.
Okay, well articulated, gentlemen. Talking about this partnership with the NSC, I'm sure and curious as well to ask, are there some companies that you've already started eyeing to work with through this partnership?
So yes, the nature of what we do and the nature of listed markets and the fact that we're sitting here in front of cameras means that we can't say too much about the specifics of it. I think what I will say is, because when Mobilist looks at markets that it wants to act in, one of the things we want to see is there an argument to be made for the viability of what we're trying to do in a given market or a given context or on a given exchange.
Yeah.
So when we look at Kenya, although like many other exchange, in fact, most other public markets exchanges, and not just those in Africa, globally, there has not been as much in the form of primary issuance as anyone would like to see.
Yeah.
However, when we look at what has happened on the debt side, and you mentioned some of the Acorn bonds, recent Sukuk bonds that have been launched, there's innovative products coming through there. We look at the relative prevalence of listed fund structures on the Kenyan exchange, so investment trusts. There are a few of those, and there's also a very active association that is trying to be supportive of more of them to come. I know FSD Africa is very supportive of this as well. We see the ingredients for a market that can be receptive to the type of products that Mobilist wants to be supportive of.
Okay.
I'll just elaborate very quickly on the investment trust structure. If you look at the London market, the LSE, where the investment trust structure is one that has been used for, I might get it wrong, but around about 150 years.
Yeah.
In recent times, in the last 10 years or so, there's been a recognition that you can use this type of structure to give access for private institutional investors to renewable energy assets.
Yeah.
And the London market 10 years ago did not have any renewable investment trusts.
Yeah.
And just as a brief aside, the real investment trust works well for this is because it takes highly illiquid assets and puts them into a company structure that allows you to trade the shares of that company and creates liquidity, as well as all the other benefits of a listed product for investors. So the London investment trust market 10 years ago, as I said, didn't have any renewable investment trusts. The first one launched was called Green Code Wind. It was a wind. The operations were in wind assets. It was anchored invested by the UK government in 2012 or 13. Should know this. One of those 2 years to the end 2 years. And now you have around 20 of these trusts. The Green Code Wind itself has over $3 billion worth of assets. And across the markets, I think the number stands at something like over $15 billion worth of assets under management. This happened in a very short space of time, and this goes to what I said earlier about the ability of markets to replicate once they see something works. So when it was seen that could work, the market ran with it, and now you have got a functioning liquid market for these types of assets. And that's the sort of thing we want to try and stimulate and recreate on exchanges like the NSE. And the fact that we see, for example, investment trusts already being listed here and the market familiarity being there with them, gives us some optimism that these and other structures can see the same levels of scale and replication.
Okay. Yeah, and I think it's important just to touch on some of the benefits of that. I think obviously there's a direct benefit to the companies and the projects that are looking to raise finance. And as Dave said, there's billions of dollars of investment now going into the UK renewable energy sector through these structures. But it also significantly benefits individual investors, be they investing through their pension funds or directly. It gives people an opportunity to benefit from and tap the returns of these fantastic projects. Well, you want to see that in Kenya. We don't want all of these returns to be going to development finance institutions and MDBs. We want them to stay here.
Wow. As we come to a close of the conversation, I have two last questions. And I think, Andy, I want to start with you because we're talking about the nature of how investors are really now coming into the market. He has seen a lot of developments, especially in terms of tech, in terms of how people are investing. And the first that we can enable them to do that, the easier it is actually for Mobilist to actually even have more private, investors coming in. I'd like to ask you from your own observation, how is tech and digital platforms playing a role in enhancing capital mobilization and improving investor confidence in Kenya and across Africa from your perspective?
So I think Kenya is a fantastic market for this. The UK government has worked for a long time in Kenya's financial sector. This story gets trotted out every time someone like me makes a speech or goes on TV. But we were there right at the beginning of M-Pesa, working with Safaricom and the central bank to get the regulations right and really bring that product to market. And the way that has transformed Kenya's financial sector, the financial inclusion, the access to capital for individuals and small businesses has been truly transformative. It really does lead the world in that sense. I think the next phase of that is really opening up the capital markets to individuals as well. And there's a huge role for technology to streamline the process for individuals to access bonds or securities or whatever it may be in small, affordable chunks in a really low transaction cost, straightforward fashion. So as I said before, we can kind of democratize the capital markets and really bring more people in and benefit from this.
Yeah. All right. Dave, I'll give you the last one here. And I wanted to ask you, because you've come here and you've seen opportunity as well. And I wanted to ask you about innovative financial instruments or models. What do you see emerging in Kenya capital markets to attract more investors?
Yeah, look, so adding to what Andy's just said about the specifics of M-Pesa, the UK government's role in helping to bring that to the market. I think what you see in Kenya, more so than perhaps any other region in Africa, is a real willingness, a real kind of cultural acceptance of the use of technology by individuals, and this creates a sort of ground that's fertile for more development and more investment in that space.
Yeah.
More broadly, when you look at what development finance tries to achieve, ultimately it's trying to reach people on the ground. So it's all very well and good investing in a solar plant or funding a large bank. But ultimately what you're trying to do is figure out how that filters down to the people on the ground to materially improve their lives. That's the only reason we're all here. The use of technology to aid that process is paramount, and I think it's something that's recognized in the development finance space more and more. So, for example, if you as a development finance actor are investing in a large bank, and they're going to on-lend that to the SME space, the ability for that bank to use technology to reach its customers in more targeted ways, in more efficient ways, to bring down the costs for those customers, is something that I think we're only beginning to see the emergence of, and can only help the development finance cause. The use of other innovative sort of finance platforms, where the non-bank financial institutions, for example, and technology platforms that allow this to happen in a more direct way, or in ways where banks are not set up to be efficient to do it, is another very much emerging area of focus for development finance institutions. I think what we at Mobilist hope to see is that where the use of technology allows businesses, whether they be banks or non-bank financial institutions or indeed energy providers, whatever they may be, where the use of technology allows them to become profitable in ways that make them bankable on public markets.
Okay.
And I think we're starting to see the emergence of that. Tech investing, of course, is something that has grown a lot in recent years. It's also something that is subject to the whims of interest rate cycles. So there is a maturation process that needs to take place here. There's investor education process that needs to take place here. But from our point of view, as I said, where we can see technology making products more bankable on public markets exchanges, that's something that's very exciting for us to help enable.
Yeah. If I could add to that with a specific example, I think there's a real opportunity in the carbon market space for technology and capital to come together.
Yeah.
We know that Kenya has one of the region's most vibrant voluntary carbon market now, and the use of technology to verify emissions reductions more efficiently, more effectively, in a way that is sort of clear and true and non-disputable, will really build confidence in the markets. And then using technology such as M-Pesa to transform and transfer the money that's been raised through the sale of these credits directly to communities who are planting the trees, who are renewing their environment.
Yeah.
That is a really fantastic and incredible opportunity to use technology to bring in new sources of finance, get them directly where they need to go, and really get that capital cycle flowing.
I was having a conversation with a UN Global Compact representative in Kenya, and I asked her, 2030 is so near now, how are we doing? She said, we still have a long way to go. I don't know, Andy, do we still have a long way to go?
We do. I do. We have a long way to go. As both Dave and I said at the top,
Yeah.
there are huge financing gaps.
Absolutely.
Public finance cannot and will not fill those gaps, which is why it's absolutely paramount that we work together with the private sector, that we bring that money in and then we channel it to where it really needs to go to have that most impact.
Yeah, that's why Davey's here.
Yeah, that's why we pull people like David.
Thank you so much, Dave Portman, Head of Africa Mobilist, and Andy Baker, First Secretary International Finance at the British High Commission. And really talking matters sustainable finance in Africa. Wait and see, and what Mobilist really will have to bring on the table in the markets right here. Living out with the markets, thank you so much for your time.